All right, if you're a trader, you know the feeling, right? You're staring at a chart and it's just a total mess of data. You're trying to find one clear signal in that sea of confusion. Well, today we're going to look at a source that makes a pretty bold claim. It challenges some of the most popular tools out there, like the MACD, with what it says is a real solution, an oscillator designed to cut right through all that chaos. And this quote right here, wow, it just gets right to the heart of the problem, doesn't it? Getting whipsawed. You know exactly what that is. You see what looks like a perfect signal, you jump into a trade, and bam, the market immediately flips on you and stops you out. It is so frustrating, it's expensive, and it's pretty much always caused by one single thing: market noise. So that brings us to our first section, the trader's dilemma. This is all about that constant battle for clarity and, why those traditional indicators we all learn to use so often let us down. And here's the #1 villain in this whole story: noise. I'm talking about all those random little price jumps and dips that don't really mean anything for the bigger trend, but man, do they cause problems. They create false signals, they trick you into jumping in too early, and they make it almost impossible to tell what the market is actually trying to do. So, what's the typical fix for that? We try to smooth out our indicators to filter out all that noise, right? But here's the catch. That creates a whole new problem, and it's just as bad. It's called lag. The indicator gets so slow that by the time it finally gives you a signal, the real move is already over, and now you're just chasing the market, which, as we all know, is a game you're probably not going to win. But what if you could actually get the best of both worlds? That brings us to section 2, a new kind of filter. The source we're digging into here introduces something called the two-pole filter, and it's designed to solve this exact problem. Basically, instead of just looking backward like a simple moving average, which is what creates all that lag, this filter uses a smarter math that gives more weight to the very latest price data, so you get that beautiful smoothing effect without falling behind the action. And you can see the difference right here. On the left, that's the old way, the choppy lines, the confusing signals that lead to those whipsaw losses. But on the right, well, that's the goal, isn't it? A smooth, clear signal that actually keeps up with the market. It's all designed for one thing: clarity. Now, it's a big claim, so let's see how it's supposed to work. Okay, so even the most powerful tool is totally useless if you can't figure out how to read it. So, on to section 3, reading the signals. And the source here breaks it down into just 2 super simple actions. Seriously, it's as straightforward as it looks. First, you just turn on the signal line for the indicator. That's going to be your trigger. And second, you just watch for the buy and sell arrows that pop up when the indicator crosses that line. The whole point is to take all the guesswork and subjective, maybe this is the signal stuff, out of the equation. And this just shows you what I mean. Instead of trying to read the tea leaves of some complex pattern, these arrows just give you a clear, undeniable visual cue. You see an up arrow? That's a potential buy. A down arrow? A potential sell. It's all about making your decision-making process just as clean as the signal itself. Now, this next part is huge. Let's get into section 4, built-in capital protection. Because a great trading tool isn't just about finding good entries, right? It's about managing your risk. And this filter has a really important feature designed to do exactly that. It's called invalidation levels. Just think of these as a smart, dynamic guide for your stop loss. Their job is simple, and it's not up for debate. They're there to tell you exactly when a trade idea is wrong, when it's time to get out, and how to protect your account from a big hit. So why is this so important? Well, because it takes the emotion out of managing your risk. It's like having a predefined risk manager built right in. It gives you a crystal clear exit strategy before you even click the buy or sell button. And at the end of the day, it helps you do the single most important job a trader has: protect your capital. And that brings us right to our final section, number 5, signal or noise. Because when you can combine a really smooth signal with that kind of built-in risk management, you get the key ingredient to trading, and that's making decisions with real confidence. And that's really the big takeaway from this whole idea. Whether you use this specific tool or something else entirely, the main goal for any trader is to find a way to filter out all that distracting, meaningless noise. Because when you finally do that, the only thing left is the pure signal you were looking for all along. Which leaves us with this one last question, and it's one I really want you to think about. Go take a hard look at the charts and the indicators you're using right now. Are they actually helping you see the market clearly? Are they really showing you the signal, or are they just adding to the noise?